Dear students, I have come with module 10.2 where I am going to explain journal proper, the second part. So the first part, 2 opening entries and closing entries I have explained, and here in the second part I am going to explain 3 types. So adjusting entries, transfer entries and miscellaneous entries. So these are very simple and I have worked out problems also to explain that, so that will be very clear to you. Now the first one is, what is adjusting entries? So in order to prepare the final accounts, certain adjusting entries need to be passed. So certain adjusting entries meaning prepaid expenses will be there, prepaid insurance will be there, rent paid in advance will be there, income received in advance will be there, outstanding expenses will be there, usually salary outstanding, all these items will be there. So this is what we are going to do with the adjusting entries. So how we will do adjusting entry for these items? So entries are passed for adjusting these outstanding or prepaid expenses and through the adjusting entries. So how we are going to do? I am going to do one problem to explain that. So the first problem, enter the following transactions in the books of accounts by passing adjusting entries as on 31/3/2020. So first one is salaries outstanding 5,000, then insurance prepaid 1,000, dividend declared but not received 500. So now I am going to write these 3 entries. So first one is salaries account debted to salaries outstanding. So that is 5,000. Salaries account debted to salaries outstanding 5,000. Next is prepaid insurance account debted to insurance account 1,000. When we have worked out problems for journal also, we have seen these entries. Next one is dividend accrued account debted to dividend account 500. Dividend declared but not received. So these are the adjusting entries: outstanding, prepaid and accrued. That is, accrued is dividend declared but not received. Salaries outstanding, rent outstanding, that means it's not paid. Prepaid meaning paid in advance, insurance prepaid, rent prepaid, anything. So these items we are adjusting through the adjusting entries. So now we are coming to the second one, that is transfer entry. So transfer entry usually we will do only for drawings. So drawings meaning, see, there are 2 types of drawings. One is goods withdrawn by the proprietor for personal use, or cash withdrawn by the proprietor for personal use. So 2 types of drawings, one is cash and second one is goods. So you have to remember that if it's cash is withdrawn or goods are withdrawn, it has to be adjusted to capital. So it is going from the capital account. So this is what we are going to do is, first we will explain with these 2 transactions, cash is withdrawn and goods are withdrawn. Then we will do one problem also, then it will be clear to you the concept. So here transfer entries meaning when a sum of money from one account has to be transferred to another account, it is done by means of transfer entry. Say for example, first when you cash drawings, when you first record, you will write drawings to cash account. But this has actually affecting the capital account. So the second entry we have to pass drawings to capital. So that is what we are going to do that. So that is transfer entries. Drawings is transferred to capital. So this you have to remember that. So then first one is drawings of goods and cash are adjusted through transfer entries, that I have already explained. So I am going to explain with the journal entry. First one is cash drawings is recorded. How you record cash drawings? Drawings account debted to cash account. Now this entry has to be adjusted to capital. So that is capital account debted to drawings account. So that is how we are adjusting with the capital. Similarly, goods withdrawn by the proprietor for personal use, that is drawings. So how you will adjust that? Drawings account debted to capital account. So this is how you will adjust with the adjusting entries. So one problem we will do, enter the following transactions in the books of journal proper as on 31/3/2020. Transfer goods taken by the proprietor for personal use rupees 10,000 to drawings account. So one is goods withdrawn. Second one is transfer cash withdrawn by the proprietor for personal use rupees 25,000 to capital account. So 2 entries we are going to write. First one is drawings account debted to purchases account. Drawings account debted to purchases account 10,000. Goods withdrawn. Second one is capital account debted to drawings account. So these 2 entries, one is goods withdrawn, second one is cash withdrawn. So both are adjusted through the adjusting entries. Now the third one or the last one we are coming to miscellaneous entries. Miscellaneous entries, you have to remember that these are infrequent transactions. That meaning it will not be repeated again and again. Loss by fire, loss by theft. So this examples, credit purchase or sale of assets. or loss of goods by fire or theft or interest on capital. These are the examples for miscellaneous entries. Now that I am going to explain with one problem. Enter the following transactions in the books of journal proper as on 31/3/2020. First is furniture sold to Messrs. F and Company rupees 25,000. Second one is computer bought on account from Messrs. Wipro Limited 75,000. Third is firm incurred a loss of goods due to fire for rupees 75,000, but the insurance company paid only 55,000 while settling the claim. So this 20,000 loss has happened, that also we have to adjust. Now journal proper. First one is Messrs. F and Company's account debted 25,000 to furniture account. So that is 25,000 furniture sold to Messrs. F and Company on account. So it's a miscellaneous entry. Next is office equipments. They are purchasing a computer from Wipro Limited for 75,000 on credit. So that is why this is a miscellaneous entry. Next is loss by fire to trading account. That is 75,000. Loss of goods by fire, that is the trading account. Now you have to remember that insurance claim 55,000 they got. So that journal entry is insurance claim account debted to loss by fire account 55,000. So being insurance claim received from the insurance company. Now 75,000 was the actual loss by fire. 55,000 they got from the insurance company. So the loss incurred by the firm is 20,000. So that also we have to bring into account. Profit and loss account debted to loss by fire account 20,000. So being the difference between loss due to fire and insurance claim received and adjusted in the profit and loss account. So these are the three entries. Three transfer entries, adjusting entries and miscellaneous entries. So transfer entries we are doing for salary outstanding, prepaid insurance and all. And this one, then for drawings also we are adjusting. We are entering in the journal proper. Then the last one is miscellaneous entries. So these are the three types of entry, journal proper entries I want to explain with this module, and I have explained one problem also. So I hope you understood this. And I am explaining it in a simple way possible. So one concept I am explaining, the relevant problems also I am doing, and in the description box you can find that questions also. So it's your duty to do the problems. So write the questions in your notebook. With the explanation you do the problems. Then you work out that. Many problems I have given for working. So that also you can do that. So I am telling you, happy learning with Dr. Alice Mani, and encourage me with your feedback. And see the videos from the beginning. Then you can learn the subject in a systematic way. Subscribe, promote, and give me the valuable feedbacks. So happy learning with Dr. Alice Mani. Thank you.